Hello traders, Day Trader Matt here of businesswithtrading.com, doing a trading strategy recap for Friday the 15th of May. And today was an interesting day. We had a slight gap up here and price chopped kind of to the downside, chopped to the upside, and then sold off to chop into lunch. Today we ended up pulling 3.5 points out of two trades. Our first trade was right off the open. We got long and we were able to take profit on the way up. And then price came back down. It kind of moved very haphazardly. We watched it just to try to get a feel for what was going on. We entered short up here. We entered short right here. And we ended up taking profit quickly. Ended up taking profit down here just because price came down. It looked like it was going to come back up. It didn't really do that. It came up a little bit and then it just rolled over. It's one of those things. We still pulled out 3.5 points, and really, as long as we're making points, that's really what matters the most. Trading is all about consistency, all about pulling out money every single day, and we know as traders that that's impossible. We're going to have days where we lose money. It's going to happen. But if the more you can build up that cushion, so when you do give money to the market, you're taking it out of that cushion you already have because you've been building up those consistent profits, over weeks, months, years even. So you can give a little bit of money back here, every now and then, but you want to be able to, get that consistency because, when you do have those days that you're unsuccessful, you've given back a little bit of money, you're able to come back to the market and take that back and then some. That's what trading is really all about, is being able to make money. The reason to trade should be above money. But the end objective, cut the bullshit. It's all about making money. The reason that I like to trade, the reason I enjoy it so much is because it is very competitive. I have to compete every single day. And this isn't like retail versus institution, type of bullshit that is out there, that it's us against the big guys. That's not even legitimate, really. It's us against ourselves. That's the battle. That's the battle that we encounter every single day, and that's why the majority of traders don't make it. It's not because, Goldman Sachs did this, that's why I lost money today. That's total bullshit. Or JP Morgan did this, and that's why I lost money. Or Janet Yellen, or back when Bernanke was Fed chair, or whatever. Excuses are excuses. But we're in this business, this trading business, for the long haul. We get in it to make money, to make our lives easier, to make our lives better and more fun. And if trading doesn't do that, maybe you're not cut out to be a trader. Or maybe you just haven't learned the correct principles yet. Really, we should take this weekend out to really reflect on things. Do you want to be a trader? If so, maybe you're in the wrong market. Maybe you're in the right market. You just haven't learned the principles yet. Because there are a lot of different ways to trade. And a lot of what's out there is cookie cutter approach. I had a discussion with a course member of mine, and we were talking about price action. And he was telling me that a lot of the techniques that I teach are a little bit different, and he just thought it was really, really great material. He was really loving it. He's one of those people that jumps into the material, learns it, and then after you have a good grasp of it, then you start applying it. And that's the best way to do things. But in bringing that up, there's a lot of cookie cutter approaches out there. And price action it has turned into a buzzword. There was a guy many years ago. Some of you know who I'm talking about, some of you don't. But it was all about, confirmation techniques. And, once you see this pattern, then you're able to get in. But your risk would be so much more. And it would just not make sense. Sometimes you're able to get a better reward. Sometimes you're not able to get a better reward. As you're day trading, it makes it difficult. And that type of method, I'm not going to get into what exactly it is because that's not what I teach, and there's no reason to get into it. But speaking purely from a reward to risk point of view and risk management point of view, if you take a trade where your risk is way more than it would have been if you took it where you should have taken it at. And let's use this as an example. Let's say you shorted right here after this bar here. Okay, so you shorted here. Where would your stop have to go? Well, it would have to go right up here, if not up here. That's where your stop would have to go. So let's say you put it right here at 9.5. You're short, let's say 6.5. So that's a 3-point stop. Where did the market go to? Market went to 3/4. Okay, you're short 6.5. Your stop's at 9.5. The market goes to 3/4, which means you could have taken 3.5. So a 3-point stop, 3-point target. Is that possible? Yeah. It's a 1-for-1. Not great, not horrible. But the majority of the time when you're day trading, and we trade a tick chart, we trade, a smaller chart than this in the room. You're having to take bigger and bigger risk, and because of that, you're going to get a very choppy P&L, much more choppy than our results in the trading room. So I just wanted to bring that up. I had a question about that. If you have any follow-up questions, feel free, because that's the whole point of the website is learning. Our motto is empowering traders through education, and that's what I feel should be. There's a lot of bullshit out there, and a lot that just doesn't make sense. Let's form a strategy strictly on like candlestick patterns. That does not make sense to me. And there's a difference. There's a pattern that a lot of people go through when they're learning. They start out in one area, and then they grow, and then they grow some more, and then they grow some more, and then they grow some more. And once you get to the professional level where you've grown so much, and don't get me wrong, in trading, and this is the way I feel, that you will always learn something, always be growing. I don't think that you ever hit a plateau. You'll get to a level where your method works well, you're happy with it, your risk management works really well, you're happy with it, you don't have to tweak anything, you just sit there and trade. And you get to that point, you're still going to learn stuff. And you might find a couple things here and there that you can tweak. My risk, if I did this over here, or if I, allocated this much per trade, this would be different. But, that's when you get to a level where your method works fine and you're doing really well. And you're trading more like a big bank trader or an institutional trader, because they trade a little differently than retail traders. They don't wait for a confirmation, wait for a candlestick pattern, or oh wow, this candlestick pattern just showed up, let me take this trade. They don't do that shit. They want to take a trade at the most optimal level as possible with the least amount of risk possible. That's their entire strategy. And that's a strategy. I have a similar strategy, as far as a risk perspective. Don't risk a lot, and you want to be able to make sure that your trades count. Maybe consistently you make 3 points a day. Well, once you are able to do that, that means you can trade more contracts. So instead of making 3 points on one contract or 3 points on 2 contracts, you can make 3 points on 4 contracts or 3 points on 6 contracts. And it just turns into such a fun business. Because that statistically you're going to make money. You're going to be well off. So anyway, hopefully made sense what I talked about today. I jumped around a little bit, but I felt it was necessary to get the point across that I was trying to get across. So if you want to add anything, comment section below. Thanks for watching. Have a great rest of your day. Awesome weekend. And I'll see you back here in the markets. Thank you.